Welcome to Earnings Recap. Today we're covering CVS Health's earnings report and earnings call January-March 2025. If you enjoy this kind of content, please like the video and subscribe to the channel.
Yeah, and what we do here is pretty straightforward. We take those really dense financial reports and the earnings calls, which can be even tougher.
Right.
And we basically boil them down, plain English.
Exactly. The goal is to give you the crucial insights, help you understand what's going on with CVS Health's latest performance and their outlook, but without getting totally swamped by all the jargon and the sheer volume of information.
That's it. You're tuning in because you want that quick but still thorough understanding. So our mission for this deep dive is clear. Pull out the most important bits from the official Q1 2025 earnings report.
That's the big financial dog.
Right, the numbers. And then also from the earnings call that happened afterward, where analysts really grilled the leadership team on performance and strategy.
Okay, so we've got two main parts lined up for you. First, we'll really dig into the numbers from the report. The scoreboard for the quarter revenues, profits, all those key figures.
Hard data.
Yeah. And then second part, we'll unpack the earnings call. What did the execs actually say? What were the big takeaways, the interesting questions, and importantly, what's their outlook?
Sounds like a plan. Let's jump into those numbers first.
Okay, so overall picture. How did CVS Health do financially in Q1?
Pretty solid, actually. Total revenues hit $94.588 billion.
Wow, okay. $94.5 billion. How does that stack up against last year?
That's a 7.0% increase compared to the same time in 2024 when they were at $88.437 billion. So definite top-line growth there.
Okay, good growth. And did that translate to the bottom line, the profit?
It did, yeah. Net income attributable to CVS Health. Basically, their profit was $1.779 billion.
And compared to last year?
That's a big jump.
Yeah.
A really significant one, actually. It's up 59.8% from the $1.113 billion they made in Q1 2024.
Almost 60%. Okay, that's substantial. And earnings per share.
That followed suit. Diluted EPS came in at $1.41.
It's up from
$30 and ever 88 cents last year. So strong gains across the board, revenue and profitability.
Interesting. So where did all that revenue actually come from? Can we break that down a bit?
Yeah, let's look at the sources. Products revenue, think pharmacy sales, front store stuff that increased by 7.3% to $57.669 billion. So the biggest chunk.
Okay.
Then you have premiums revenue. That's mostly their insurance side, Aetna. That was also up 8.0%, hitting $32.820 billion.
So both core areas growing nicely. Anything else?
Well, this is interesting. Services revenue that includes their PBM, Caremark, and clinical services actually went down.
Oh, by how much?
Decreased by 7.5%, down to $3.579 billion.
Okay. So a bit of pressure there. Was there anything offsetting that?
There was, yeah. Net investment income saw a nice bump, up 14.5% to $520 million. So a little bit of a mixed bag in the revenue streams, but overall growth was strong, like we said.
Got it. Now, revenue is one thing, but what about costs? You need to spend money to make money.
Absolutely. Cost of products sold, that went up 6.2% to $51.057 billion. Kind of tracks with the revenue increase there.
Makes sense. And healthcare costs for the insurance side.
Those rose too, but a bit slower, up 4.8% to $29.135 billion.
Okay. And just general operating expenses, running the business.
That saw a bigger jump, actually, up 7.1% to $11.022 billion. And it's worth noting, there was a significant litigation charge baked into that number.
Ah, okay. We should probably come back to that litigation piece. But first, maybe the different business segments. How did each major part do?
Sure. Let's start with healthcare benefits, the Aetna insurance side. Revenues were up, like we saw in the premium numbers. They really highlighted the Medicare business as a driver.
Anything specific within Medicare?
Yeah. They mentioned the improved Medicare Advantage star ratings having a positive impact. Those quality scores are really important. And they talked about the medical benefit ratio, the MBR.
Right. The percentage of premiums spent on care, always a key metric for insurers.
Exactly. Then there's health services. That's the PBM, specialty pharmacy, etc. Revenue increased here too.
Despite the overall services line item being down, how does that work?
It's about the mix within the segment, I think. They pointed to a favorable drug mix, meaning more profitable drugs being dispensed, plus specialty and brand inflation.
Price increases helping there.
Right. Though they said that was partly offset by price concessions to their own clients. They also processed more pharmacy claims overall. And the launch of Cordavis, their biosimilar venture, contributed here too.
Okay, Cordavis kicking in. Now what about the retail side? Pharmacy and consumer wellness.
Also saw revenue growth. And this was really driven by the pharmacy itself. Same-store pharmacy sales, just looking at existing stores, jumped almost 18%.
Wow, 18% is huge for retail pharmacy. Prescription volumes.
Up nearly 7%.
Uh-uh.
So lots more activity there. They also mentioned gaining retail pharmacy script share, which is a good sign for market position.
But it wasn't all rosy.
No. The front store sales, everything but the pharmacy were basically flat. And they did call out ongoing reimbursement pressure, getting paid less per prescription.
A perennial issue.
Yeah. And also some softening demand for those front store items. But overall, prescription volume was definitely up across the board.
Okay. And that last bit, corporate other.
Revenue's up slightly there, mostly from that higher investment income we mentioned. But they did report an operating loss in that segment.
Gotcha. So you mentioned a litigation charge earlier. Were there other big sort of one-off items affecting the operating income this quarter?
Yes, definitely. And these are important for context. First, a positive comparison point. Last year, Q1 2024, they had a $100 million opioid litigation charge. That wasn't there this year.
So that makes this year look better by comparison.
Right. But then, this year, Q1 2025, they took a new $387 million litigation charge. This one was related to a jury verdict against Omnicare, their long-term care pharmacy business.
Oh, okay. That's a big number. Anything else?
Yes, two more significant items. A $247 million pre-tax loss tied to their accountable care organization assets.
Why the loss there?
It's because they decided to get out of the ACO REIS program and sell off their Medicare Shared Savings Program, or MSSP, business. So, strategic shifts leading to a financial hit this quarter.
Okay, exiting some value-based care programs. And the last item?
A $450 million premium deficiency reserve. Basically, setting money aside because they expect future losses.
On what?
This is specifically related to their exit from the individual exchange business, the ACA plans for the 2025 coverage year. They anticipate the remaining claims will cost more than the premiums they collected for that year.
Right, they announced that exit earlier, so this is booking the expected cost.
Exactly, so quite a few moving parts impacting that operating income number.
So with all that context, the growth, but also these charges and reserves, what did they say about the rest of the year? Did they update their forecast?
They did. And interestingly, despite some of those charges, they actually increased their adjusted earnings per share guidance for the full year 2025.
Oh, really? To what?
The new range is $6 to $6 to $6 per share. That's up from their previous guidance of $5.75 to $6.
So they're feeling more optimistic about the full year, even with these Q1 hits.
Apparently so. Suggests they see underlying strength or expect some of these headwinds to be manageable over the full year.
Okay, that's a really helpful breakdown of the numbers. So now let's shift gears. Part 2. The earnings call itself. What were the key messages from management, and what did analysts focus on?
Right. So standard disclaimer first, forward-looking statements, risks, non-GAAP measures, all that usual stuff. The details are in the press release if you want the nitty-gritty reconciliation.
Got it. So the CEO, David Joyner, what were his main points?
He kicked off emphasizing momentum, talked about their aspiration to be America's most trusted healthcare company. He acknowledged Q1 was solid, but also noted it's a challenging environment out there.
And he mentioned the guidance increase.
Yet reiterated that increased full-year adjusted EPS forecast right at the top. He also specifically highlighted Cordavis, the biosimilar business, saying it was showing early success. And he talked a lot about GLP-1s.
Ah, yes, the weight loss and diabetes drugs. Very hot topic. What did he say?
This was probably the biggest news from the call. They announced a major partnership with Novo Nordisk.
The maker of Wegovy and Ozempic.
Exactly. Specifically focused on Wegovy, the weight loss drug. The goal is to increase access and make it more affordable for members covered by Caremark, their PBM.
How are they planning to do that?
They plan to make Wegovy the preferred GLP-1 on their main commercial formulary starting July 1st. That template covers tens of millions of people.
Wow, preferring Wegovy. That's a big deal in the PBM world. It could really shift market dynamics.
Huge deal. It directly tackles those cost and access issues everyone's talking about with these drugs. Joyner also talked about integration benefits.
Within CVS Health.
Yeah, specifically mentioning Aetna Medicare Advantage members who use CVS pharmacies. He said they show better medication adherence and actually have about 3% lower medical costs.
So plugging their integrated model. Makes sense. Did he address any challenges?
He did. He called out what he termed misguided actions, specifically pointing fingers at the Arkansas government's move to limit pharmacy access for certain drugs. So highlighting regulatory friction.
Okay. And the portfolio management.
Right, he touched on that again, confirming the exit from the individual exchange business, the ACA plans, starting in 2026. Cited the ongoing losses, projecting $350 to $400 million in variable losses just for 2025, and basically said there wasn't a path to make it work long term.
Understood. So setting the stage for the analyst Q&A, what were they digging into?
Well, Medicare Advantage was definitely a focus. Analysts want to know about early trends, any pressure points, especially in the Group MA business, where costs seem to be rising.
And the response?
Management said individual MA and Part D looked okay early on, but yeah, they acknowledged pressure in Group MA because of higher healthcare use. They noted that multi-year contracts limit what they can do immediately.
Right. Can't change rates overnight.
Exactly. So they're focusing on clinical programs to manage care better and planning rate actions for the future.
Makes sense. And that Wegovy partnership, I assume that got a lot of questions.
Oh yeah, big focus. Analysts wanted the why and the how.
What was the core reason management gave?
Client demand, basically. Employers and health plans are desperate for ways to manage these GLP-1 costs. They said about a third of their clients weren't even covering them because of the price tag.
So this Novo deal is positioned as a solution.
That's the idea. Increase access, potentially at a better price. They mentioned Caremark's clinical support would be integrated and hinted the negotiated Caremark price would be better than that, $499 retail price, Novo announced elsewhere.
Interesting. What else came up? PCW, pharmacy cost advantage.
Yeah, PCW. Management positioned this as their own innovative pricing model. The idea is to use it to create competition and lower costs when there's enough drug supply.
And they'll use this in their own CVS pharmacies.
Yes, and they contrasted this approach, aimed at lowering costs nationally, with the situation in Arkansas, which they argued could limit affordable access to something like Wegovy.
Drawing a clear line there, what about the individual exchange exit? More questions on that.
A few more, yeah. Seems like analysts appreciated the transparency. Management just reiterated they'd serve members through 2025. They emphasized it's a $7.5 billion block of business with high fixed costs.
So getting rid of the variable loss is the main financial upside.
Primarily, yes.
Yeah.
That $350–400 million expected loss for 2025. It's about stopping the bleeding and focusing resources elsewhere.
Okay. Any updates on Medicaid? Rates are always an issue there, too.
They sounded relatively positive, said advocacy efforts to get rates aligned with patient acuity are on track, working with states.
Good. What about health services again? You mentioned strong Q1, but any caveats?
Yes. A note of caution for Q2. Management reminded everyone that pharmacy services can swing quite a bit quarter to quarter.
So don't expect Q2 to necessarily match Q1's strength.
That seemed to be the message. They specifically said consensus expectations for Q2 might be notably higher than their internal view, managing expectations a bit.
Smart. Anything else noteworthy from the Q&A?
Briefly touched on prior authorization, saying they're still working to streamline it. And a mention of culture, focusing on an advocacy mindset for members and providers, improving the experience.
Okay, so wrapping this all up then, what are the main things you think people should take away from this quarter for CVS Health?
I'd say 4 key things. 1, solid Q1 financial performance, especially on the bottom line.
Yep.
2, they're confident enough to raise their earnings guidance for the full year.
Okay, increased optimism.
3, that strategic shift is real. Getting out of the individual exchange business is a major move to shore up profitability.
Right, cutting losses.
And 4, that big Novo Nordisk partnership for Wegovy. It's a significant attempt to tackle the GLP-1 cost and access challenge head-on, leveraging their Caremark scale.
That definitely seems like a major development to watch. So hopefully this deep dive has given you, our listener, that concise but insightful understanding we promised.
Yeah, cutting through the noise to the core story, which I think leads to a pretty interesting final thought for you to chew on.
Go for it.
Well, think about how this whole landscape around drug pricing and access is shifting, especially with these blockbuster drugs like GLP-1s. How is that going to keep shaping what companies like CVS Health do?
Right. This Wegovy deal feels like one big move.
Exactly. But what other strategic shifts might we see down the road from them or their competitors as they all grapple with these cost pressures and patient demands? Feels like the ground is still moving quite a bit here.
That's a great point. Lots to think about regarding future strategy. Of course, if you want every single detail, the full earnings report and the call transcript are always out there on their investor relations site.
Definitely worth exploring if you want to go even deeper. But for now, thanks for taking this deep dive with us.